and good morning, everyone, again. I'm so pleased to be hosting this panel in sustainability and sustainable investing. I know it's a bit of a mouthful. I have two amazing panelists here with me today from Mackenzie Investments. Fate Saghir, nice to see you, Fate. Who is the SVP and head of sustainability and is also the chair of the Sustainability Steering Committee and the head of Mackenzie's Sustainability Center of Excellence. I had to read that. There's no way I could get that to roll off my tongue. Also, we have Natasha Stromberg. Welcome, Natasha. She is the Director of Sustainable Advocacy and Stewardship. She also has several accomplishments and activities, but one I would like to make note of that she is the 2020 winner of Women Rocking the Web for her advocacy for the United Nations Sustainable Development Goals. Congratulations, Natasha, what an accomplishment. So let's first start by defining sustainability and sustainable investing. What is it? How are these two terms different yet related? And how is this related to socially responsible investing or the acronym ESG? I think I even get confused at times. So maybe we can start by clarifying that. That would be great. And maybe, Fate, we can start with you, and then perhaps, Natasha, you can chime in after Fate with any thoughts on that.
Awesome. Thanks, Tuula. Just before I start speaking, are you getting a lot of background noise, or is this just on my end?
I hear some background noise.
You're good? Okay. Okay. It must just be my my computer. Thanks again for having us. Really excited to speak about this this topic, and nice to see you, Tuula. So a couple of things. Sustainability in its broad sense is really about progressive corporate behavior. A few others are getting background noise. Do you want me to exit and rejoin, Tuula? Would that be helpful?
If there's anyone that can put their selves on mute, I'm thinking that might be the issue, that someone doesn't have their mute on.
Okay, I'll try again. So sustainability more broadly is about progressive corporate behavior, and that means companies are considering the environmental and societal impact of the products and services that they bring to the market. And so that's like at its core, that's how we define it. Now, when you move into sustainable investing, now it's really putting on that lens on when you're investing in a mutual fund or an ETF or directly in the stock market, right? It's ensuring that companies values and practices respect all of its stakeholders and are not just focused on company profits and earnings at the expense of its employees, its clients, its environment, right? So that's you know how we talk about the two. With regards to environmental, social, and governance, or what we call ESG. These are non-financial factors that today are not required to be reported in a company's financial statements. And so they're non-financial factors, but they could have an impact on the financial statements and on that company's earnings. So, you know, we do a lot of analysis in trying to determine, you know, across industries and geographies, which of these factors should we consider in our investment process that might have an implication on the performance we can deliver to clients. And, you know, socially responsible investing, just to tie it with that, is really, to me, it's an outdated term because it made it seem that, you know, if you were socially responsible in how you invested, that you didn't care about, you know, making money, or you didn't care about a number of other factors that are absolutely important. So that term is being used less and less, and I'd say synonymous to sustainable investing and how we think about it today.
Great, that's very helpful. Anything to add to Fate's comments, Natasha?
Yes, I think it's worth saying that in the broader sense, when we look at sustainability, it's really saying as companies that are operating in today's marketplace that may be profitable on their current operating model, will they be profitable in the future, based on things like climate change and biodiversity. These are things that we're seeing. The companies that have made their fortunes on economic models based, you know, in the now and in the past, are those economic models sustainable to get company returns in the future? And that's really, it's looking at those companies thinking, is this business model, am I going to invest in a company that current business model does not appear to
Excuse
be
me.
right for the future.
Oh, sorry, Natasha. We are unable to hear you properly. I think there's a lot of background feedback.
I mean, I can hear everyone extremely clearly, and I can also hear Fate
Do you
extremely
think you could
clearly.
log out and log back in, Natasha? You're completely garbled. We can't, yeah, okay, thank you. So maybe while we're waiting for Natasha to come back on, I'll ask you another question, Fate. What is someone investing in exactly when they invest in a sustainable fund or an ETF?
Yeah, that's a good question, and it's a you're not investing in any one thing, right? So I just want to take a step back. So under in response to your first question, I defined kind of sustainability more broadly. Oh, I think Natasha, I'm sorry, Tuula. Natasha, I think your computer is the issue. Do you mind restarting it altogether and trying again? Isn't that awful when you're the,
Yes, I know.
the one?
Well, it's technology, you know, we're all on Zoom calls and a zillion, you know, Zoom and Microsoft Teams. There's always a problem. So
No,
anyway,
totally.
all good. We have to be patient.
Yes, for sure. So hopefully if she restarts, we'll be able to resolve that. But so there's a number of different approaches that investors should be thinking about if this is a space that they want to start investing in. And so on one end of the spectrum, what we actually don't call what is not sustainable products or funds is that kind of broader category of responsible investing. And this is in Canada, like I'll tell you about, I think now about 65% of our assets would count as responsible investing assets. And so this means investment managers, money managers are taking ESG risk. So that material risk that I defined earlier, they're taking that into consideration when they're investing. But it's still, the fund is still, the objective there is still about the long-term capital appreciation. It's still about earnings and your traditional metrics. So you put that aside because that's not sustainable funds. So once you move into the spectrum of sustainable funds, now you're talking about within the prospectus, portfolio managers or asset managers like ourselves would have to put that there's a sustainability or an ESG objective. And so when you're investing in a fund, you should be looking in your prospectus documents to see what is the objective of the fund from a sustainability lens. And so within there, like, you know, within the types of things that you should see there, you've got, you know, what we defined as sustainable core. So this is best in class strategies or positively tilted strategies. So this is, you know, you're not looking to exclude industries necessarily, but you're looking to invest in the best of the best, right? So I'll give you an example. Even within the oil and gas sectors, you'll see some sustainable funds might still have exposure to a company like Suncor, right? And they do because Suncor is on a transition, a pathway to net zero, right? So that essentially, talk about progressive corporate behavior, they're on that path. So when you're thinking sustainable core, you'd look for, you still want a broad exposure to different sectors and industries, but you're looking to invest in companies that are actually moving in the right direction to a sustainable future. One step over to that, we have thematic funds, and sustainable thematic funds is where you're investing in perhaps in the energy transition. We have a green chip fund that's done exceptionally well, both from an impact and a performance perspective. You can have funds that are specific to sustainable agriculture. So this is, you know, you've got a broad macro theme. You see capital moving there, and we think we can create extra value for investors. And then the third category is where you move into the impact space. And now in impact investing, profits are secondary to your ESG or sustainability outcomes. And so you have to be willing to take some short-term losses for the long-term gain or for the long-term development of our future. So that's kind of more broadly how what investors might be investing in. And I'd you know, encourage everyone to really review, especially that objective and maybe the strategy within your more technical regulatory documents to see exactly what that investment manager is doing for you.
Great, thanks, Fate. So one question I've had people ask me when talking about this specific topic is, are you giving up return on some performance in order to be able to invest in these kinds of funds versus, you know, general funds and equities? What are your thoughts on that?
Yeah, it's, it's a topic that continues to surface, but I think, if you asked me this question, Tuula, a year ago, and we might have talked a year ago about this, and it was much more, I think, a prevalent issue. I think we're seeing it less and less important today, and a couple of reasons for that is, I think what we're looking at is, these sustainable funds, you can still, like, they're gonna, for the most part, operate within the realms of the craziness of the public markets, right? For the most part. So, if energy is up right now, right? So there's a cyclicality, around there, and some inflation that's at play there. And so you're going to see, some of your more green or renewable oriented funds are not going to do as well, right? When growth is doing really well in the stock market, right? Your value type strategies or your improver strategies may not do as well. So we have to be cognizant that it will, like, these funds are not protected from the market, and they will operate within the same dynamics of the public market. On specifically on what we've seen, and there's been a number of Morningstar reports, almost every quarter they release reports that suggest that these funds are actually performing within their respective categories. There's you're not really leaving performance aside or making it secondary if you invest in these funds. And I'd say, one of the reasons that we're starting to see this shift away from maybe that perception that these funds are performing less adequately than their traditional counterparts is, traditionally, when we thought about sustainable investing, it was all about exclusions, right? And so it was, for a portfolio manager, that meant if you're excluding tobacco, you're excluding, fossil fuels, you're excluding, adult entertainment controversies, you're basically reducing the size of your investable universe. And so that prohibits portfolio managers from operating within that dynamic market, right? So now with strategies like your best in class strategies and, impact strategies, you have a bit more flexibility where you could still operate within the market without and have exposure to the cyclical nature of it. So I would say that still something that should be, you should most definitely be thinking about a performance of your funds and the returns, but I'd say if you're going to get into the space, get into it for the right reasons. It does have to be about the impact. Natasha and I were talking about this earlier, and I have a meeting with my financial advisor on Friday, and I was saying to my husband, I said, I've asked him to be in a number of impact sustainable strategies, and some have done well and some have not, and I'm okay with that. I don't want to touch those, but on my traditional allocations, I'm like, hey, my returns are less than the market. And so there now I'm really, I don't know what I'm getting if I'm not, I might as well be in a passive, more passive strategies, right? So it's important that you're thinking about the impact and being much more impact oriented in investing there.
Thanks, Faith. And I think we have Natasha back. So hopefully, oh, no, you're still garbled. Maybe while you resolve that, I'll ask Faith another question. So Mackenzie's doing a lot in the sustainable investing space, as you know, and you're leading the charge. Maybe you can just tell the audience a little bit more about what Mackenzie is doing corporately, because I think, as I mentioned at the outset with my opening remarks, as a corporation, Mackenzie stands behind so many wonderful initiatives, and so just maybe love to hear a little bit about what you guys are doing from a corporate perspective.
Sure, maybe I'll touch on Mackenzie specific, Tuula, and thanks for asking the question, giving me the opportunity to talk about all the wonderful things we do. So I'll talk about Mackenzie, and I'll touch on IGM, our parent company, and some of the good work we're doing there. At Mackenzie, we have our charitable giving foundation. So we celebrated 20 years in that last year. We've given over $10 million to grassroots charities, Canadian charities in Canada. So we're really proud of that. And to layer onto that, we also have a donor advised charitable giving program. So this is great for investors, especially investors that want to be able to provide the investment access to some of the charities that they love and support. It's a great program that I'd recommend if you have the time to learn about and to look into. So those are our charitable giving is something I'm really proud of personally. On the DE&I side, Tuula, our CEO, you can't stop him from talking about gender equity, and yes. I think he's since he's celebrated his 5 years at Mackenzie just this past year, and I think if you look at our leadership team 5 years ago, you look at our leadership team now, we're a much more diverse bunch, and I think that's something that Barry is quite passionate about and continues to drive for our organization. So we have a number of initiatives in place and a targeted DE&I strategy on how we're going to approach our company and ensure that we're also future proof and we're representing the people that we represent, right? And I'd say there on the DE&I side, one of our biggest challenges is we have within investments, you don't have a lot of women wanting to come into the investing space, or maybe they get to a certain level and they opt out or they move to another industry. So we're very challenged from an employee lens perspective to recruit and bring more women. So if there's women out there that it's not a scary industry, and asset management, investment management could be very exciting, and you can have very thoughtful careers. So we're trying to really advocate to have more women there, and that's something that's important to us. On the third focus that I'll talk about is our focus on the environmental space, which is we've always done corporately in terms of our operations. We've always done a great job managing our footprint. We've actually, by 2022, we expect to be carbon neutral. So we're really looking, especially as we go back to the office next year, what are some of those behaviors, right, that we could bring back into the office? Less travel, less commuting, right? More efficient meetings and so on. No printing. We're getting rid of the majority of our printers so that we could reduce waste there. So we've always had that kind of corporate focus, and we're looking to really amplify that next year. But I'd say, some of the other things that we've done is more recently we signed up for the Net Zero Asset Manager Alliance, which is a global movement. And I'd say, there was a few asset managers that I've signed up to that, but not as many as I would expect. So I hope that we see the Canadian asset manager industry join the global players. And so what that means for us is, we're working across our investment teams and looking at our funds to understand what is their transition journey and how do we get to a net zero future. So that's work that I'm really proud of, and it's beyond just the sustainable funds and products that we offer. Beyond that, we're also working on a number of broader engagement groups, whether it's Climate Action 100 or the Climate Engagement Canada, which is a new initiative that launched this year. And at the IGM level, we will be releasing our climate statement over the next coming weeks. So this is, again, it holds us accountable corporately through our operations, but also ensures that in how we're managing our investments, we are aligning to a net zero. So lots of good stuff. And I think, we've got a wonderful group of leaders that are all really pushing for, walking the talk and really putting ESG at the center of how we manage our organization.
Great, thank you, Faith. And this is such an important topic. The facts, our research shows that women do tend to care more about this than men in their portfolios, but their challenge is, how do I incorporate that into my portfolio? You mentioned the one program in terms of the charitable giving, which actually I'm a client of that. I think these are things that, as investors, we need to look at other factors besides just the plain vanilla portfolio and how we can impact the world. Mackenzie also has a global leadership impact fund, and that's a fund that I absolutely love because it only invests in companies where there is 50% of the board are female, or there's a female CEO, and that has had tremendous performance. Of course, because of all the women leadership as part of it. But again, that's another way you can invest and give back to helping to empower women globally. And
that's right.
Sorry, go ahead.
Sorry, Tuula, I was just going to say, and that's the Women's Leadership Fund. Actually, that's a great example of when sometimes performance will be secondary So last year, that fund didn't do as well as we would have liked. And one of the companies they were not invested in that was on their radar was Amazon. And the PMs refused to invest in Amazon until Amazon had added 3 women to their board. And so once they did that, and I believe I think that they moved Amazon into the portfolio in November of December of last year. And now you see we're kind of getting the back end anyway of the COVID revenue that Amazon's been able to collect. But that's a good example of where if you have a conviction where, no, I believe women on boards, makes a significant improvement to performance, engagement, innovation, then like be in it, right? And you'll see that the performance will come in time. So it's great to see how as capital allocators, right, and as investors, you're moving capital from one company to another. With that comes power, right? And I love how we, and this is, I wish Natasha could, I want her computer to work, because that's what she's doing for us, is she's helping to align all of our portfolio managers around specific themes, so we can go out to these companies that we're invested in and prospect investment opportunities to say, hey, we want you to do these 2 things before we start to put more capital your way. And we think, your money is power, and we're trying to help investors do a better job of that.
Great. Well, we'll have to have Natasha on the next time for sure, and we'll double check the computer's working. So one last question, and I'm always about action, and a lot of what we're talking about today is next steps in terms of pursuing some of these initiatives. What are some steps that someone could take to get on the path to sustainable investing?
Yeah, that's a great question. It's I think learning is number one, right? Starting to, and I know, Tuula, you and your team have built some great content and material for women to, go and get engaged, learn what it is. So I think under having that foundation of what sustainable investing, means is important. I think the second point is, like, think about what's important to you. Right? Again, I'll go back to, we're consumers, we're investors, right? The brands that you bring into your home, the companies you choose to, give money to over another. If you're able to, do think about what your values are in terms of where you're putting your money. I think that is very important. And then try to align your investments to that. And I think, whether you go on to doing a plug for Morningstar, morningstar.ca, but, they've got some wonderful content on the mutual funds and ETFs you might be invested in. They'll give you a small profile of the carbon footprint of the company and so on. So you can, there's some impact or sustainability metrics. If you're with a specific asset manager, investment manager, ask for the impact reports, right? So that's, next year you'll start to see the regulators in Canada are requesting that we start to report on not just the dollars and cents performance, your traditional risk return profile of a fund, but also the sustainability characteristics of the fund. That will be a regulatory obligation for us. And so ask your advisor for, the impact profile of the report. Make sure you're checking, the prospectus to understand the objective of the report, and tie it back to how does that, align with my values and what's important to me as a consumer and as an investor. So I think those are, three or four things that I know are very important to, myself. And I think, Natasha, I'll speak on your behalf and to Natasha as well. And it will be a good place to start.
Thank you so much, Faith. This was incredibly valuable for all of our participants today, and definitely we'll have you at our next event and have Natasha there as well. And because I think this is a topic that will never get old. It's just going to become even more prevalent. So, and again, as women, these kinds of things definitely are important to us. So thank you for sharing your knowledge, and look forward to seeing you soon.
Thank you, Tuula. Thanks, Natasha. Have a great day, everyone.